Hello, everybody, and welcome to the show today. I'm so glad you could join us because today we're talking about some things about real estate investing that you've probably never heard before. As a matter of fact, there's some real intricacies and some really cool, I don't know if I want to call them tactics, but some things you should be aware of if you're already in the business of investing in real estate or if you're interested in being in the business. So over the last 30 years with us today is Eddie Lorin. Now, Eddie has successfully purchased and transferred over the last 30 years $30 billion worth of multifamily real estate, acting as either principal or advisor, amounting to more than 180 thriving communities, covering approximately 40,000 apartment units throughout the United States. Now, led by the belief that housing that's affordable should be every person's right rather than a privilege, Eddie has made it his life's mission to fix the housing affordability crisis in America and to make safe, quality housing and community support available and affordable for all. Now, Eddie's taking his experience in leading an intergenerational movement tied to inflating housing prices to do the same through his work with the Strategic Realty Holdings, the perfect marriage of impact, investing, and multifamily real estate, providing a triple bottom line: financial, environment, and social returns to his investors. So open to accredited investors and institutions, SRH delivers market rate returns to the investors while providing more affordable, better quality housing to those who need it most. We'll be diving into talking about a lot of those things. So Eddie, welcome to the call today.
Thanks for having me. That was a great introduction. I appreciate it. Couldn't have done it better myself.
You've done a lot, man. 3 billion in deals. So you've got a little bit of knowledge and experience on this topic.
Yeah, no too much. It'd be dangerous. That's what they say, right?
So what is going on? Fill us in. I mean, what is this current housing crisis that's really facing the working class right now?
Well, unfortunately, incomes have stagnated over the years while rents have risen. That's the basic global problem. Not only here in America, but all over the world. But let's focus on America. If people's incomes don't keep up with rents, there's a problem. So that's what's happening. And also there's a problem with supply. We need to build a lot more housing because there's a lot of neighborhood groups like NIMBY, if you've heard of that, not in my backyard, that are preventing new supply from getting developed. So as a result, supply and demand, basic economics, if you're struggling to find clean, safe housing that's affordable, then the options are slim and people are 1 foot on a banana peel. And unfortunately, that's why we have a homeless problem as well. So it's a global problem that can be solved multiple ways. 1, build more. 2, incentivize people to take older product and deem it affordable before it becomes unaffordable. And there's a variety of public-private partnerships that can come together to make sure that we create enough housing that's possible. We also have to, I could speak liberally and conservatively on both. I'm really a middle-of-the-road guy. On the liberal side, we need to make sure that people have all the resources they need if they're hardworking people and they need those vouchers. And we're starving them of vouchers, and that's a problem from the top down in the administration. Now, I'll put on my Republican hat and say, hey, look, you can't let people loiter in the streets and take craps all over, without giving them a place to live. And if you give them rights, say, I have rights, I don't have to stay in this shelter. Well, that's a problem too. So a long-winded answer to, it's a big problem that we all have to come together and try to solve.
How big is this problem? Because I think the general population listening might kind of be in shock that this is a problem. I think, from my perspective, I didn't realize this crisis was even looming. So how big is this crisis? I mean, what kind of impact are we really talking about?
Well, we're short 7.2 million apartments or homes today.
Wow.
It's only getting worse. And in Los Angeles, where I am alone, we're short 500,000 units for the very low income, which we call, California is the 5th largest economy in the world. So the problem is that to be able to get 500,000 apartment units that are affordable, what's affordable? Let's define affordable. Everything's tagged toward area median income, or AMI. So let's say area median income is 60 grand. If someone needs to only makes about 50%, so they only make 30 grand. And then 30% of that is all they should be paying in rent because they have to pay for gas and transportation and food and all these other things. So that 30,000 times 30% is 9 grand. Where are you going to find housing for $9,000, 500,000 of them? It's a problem. So that's why we need vouchers, the government to step in. If someone can only pay that $9,000 a year or $700-800 a month, and the rent's $1,400, you need a voucher to supplement it. We need the foundations and endowments to come in and add a little helping hand. We need the state to kick in. We need to house these people and not throw them to the wolves. We also need to invest heavily in mental health. Back in the 70s, when we, at least in California, they took away all the mental health funding. Well, no surprise, people are mumbling to themselves in the middle of the streets because they are mentally ill and they do need a home. And they need to be institutionalized. And they have rights. Well, they have rights. They don't have the right to defecate on the streets and give us disease either. It's a complex issue.
Sure. Yeah, absolutely. I mean, what do you think are the biggest reasons that are holding people back? Is it that housing has grown so fast and values have climbed so much? Or is it that and the fact that incomes just are staying pretty much stagnant? It's that difference, that lapse becomes larger.
I hate to say all of the above, but it is. As you're trying to make a living and there's not enough housing out there and the vacancy factor is almost nothing, you can't find, it's about supply and demand. If you have a ton of supply out there, let's say you have tulips, right? And you have one beautiful tulip and you bring it to your wife and you say, isn't this gorgeous? And then she'll say, oh my God, I haven't seen one of those. And then you've got 1,000 tulips surrounding you and you say, hey, look, honey, here's a tulip. She's like, well, what's the big deal? The value is in the supply and demand issue. So we need to just build more. And when you have neighborhood groups, especially in California, that can stand up, one person can say, hey, I don't want that low-income housing development here, or I don't want more traffic, or I don't want this, or I don't want that. And meanwhile, someone's picking away, they're paying their interest on the loan, on their land, or the opportunity cost of the land they own. And it's getting more and more expensive. So by the time they can build that thing in 5 years, where they could have built it a year ago, the rents could have been a lot lower, but you're paying, the rents have to justify that crap. You see? I mean, there's so many reasons why. But if we just open the floodgates and let everybody build more, you'd have rents would stabilize, and it's the market solution. Look, it's a capitalist society. It's a great society. We need to stop hindering it.
But do you think that builders would want to focus on that kind of housing? Or because it seems like in California.
Well, all you can build is what you can build. It's just a matter of the more supply, then everybody, the nicer products get housed by the people who belong there. And then the lower end product is more available for the lower end.
So talk a little bit more about what opportunity zones are and how that ties into this as well.
Well, this is one of the greatest things out of the Tax Reform Act back in just a year ago. It used to be something called a 1031 exchange, allowed you to take your real estate and sell it, take your gain and invest in more real estate. Great. So you never had to pay the taxes, and that spurred growth and development, and it was all great stuff. Well, the top 3 states in this country, California, Massachusetts, and New York, have gotten almost 80% of all the venture capital in the last 30 years. So the authors of this bill, called the Opportunity Zone Act, decided, let's make it so that people can take their stock gains, or they can sell their business, or any capital gain, and they can transfer it into an opportunity zone and invest in these lower income areas. So there are 8,700 areas in this country that are eligible for investment by opportunity zone funds to build, to open liquor stores, chicken joints, whatever, businesses are available to regentrify and rejuvenate these lower income areas. So it's really awesome. And so you can expect 3 things from investing in an opportunity zone fund. The first one is you get a deferral of your taxes. So let's say you sold your business and Ty made $10 million, and that's a good gain. And instead of paying your 20%, depending on what state you're in, California doesn't cooperate, but other states do. So let's just play with federal taxes. 20% capital gain. That $2 million gain or tax bill can be deferred until 2026. So you get an interest-free loan from the government if you invest in an opportunity zone fund that invests all or substantially all of their property or money in these opportunity zones. So that's pretty cool. So now you get to hold this thing from, let's say, 2019 till 2026, and now you don't have to pay your $2 million until 2026. Okay? That's great. So now you even get a better benefit because you get a stepped up basis. So now it's 15% discount. So 15% off of 2 million is 300,000. So now you only owe $1.7 million in 2026. So you've got a deferral, you got a step up in basis is what we call it, which is cool. But here's the key. If you hold this property in this zone for 10 years, let's say that $10 million, investment doubles, becomes worth $20 million. There's another $10 million gain, right? Well, if you held that property for 10 years, that extra $10 million is tax-free. Awesome.
Wow, that's astonishing.
It is. But like everything, there are flaws. And unfortunately, how are you supposed to pay your taxes in 2026 if you got to hold it till 2029? Okay. So you got to hold back some cash, or you can maybe refinance the property, which is okay. There are ways around it, but that's why it's taken about a year. Nobody's really made any investments yet, but we are all gearing up. I'm on the coalition with the accounting firm Novogradac and EIG, were the authors of the nonprofit authors of the legislation. And so we're getting to the point where we're all forming funds and we're ready to deploy. So, there are nuances that we're trying to work through, but in the big picture, this is awesome. I hope we build thousands and hundreds of thousands of units as a result of this, because let's face it, people don't do anything unless they get a tax break.
And the people are also, like you said, they're doing it for the return. So is there a return to be made really in this kind of investing? Is it more equivalent, less than what other investing is?
Well, let's take the average, development today, you're probably looking at a 10-year IRR of somewhere around, let's say 12 to 14%. For 10 years, that's pretty damn good, okay? With market rate returns, some affordable housing, we're just adding more product in these areas and revitalizing. That's the cool part. You actually can invest and get that phenomenal return, but if you have these tax benefits, you can expect between 300 and 400 bips on the IRR, or that 12 becomes a 16% over 10 years with the tax savings. That's tremendous, tremendous over 10 years. So that's the benefit. And so, of course, you never invest for tax reasons only, but there are plenty of developments that make a lot of economic sense, and to have the extra juice on the taxes is kind of nice.
So go ahead.
Sorry.
No, go ahead.
Let's say you sold your business and you're like, I'm facing this, some people are facing $100 million gains, and they're like, what do we do with all the gains? I'm going to pay $20 million in taxes. Wouldn't you rather take that money and put it to use and get a tax-free gain on the supplemental gain? It just depends.
Do you have to take all the money and invest it to be able to get that benefit?
No. It's just dollar for dollar. The gain is deferred, whatever gain you put in. But it has to be a capital gain. Could be short-term capital gain, could be long-term capital gain, but there must be a capital gain, not ordinary income.
What about the people that don't have that? Let's say somebody hasn't sold a business or isn't taking out of the stock market. Somebody is just a general person that's looking to invest in real estate and likes this cause and says, I want to help out. I want to solve this problem. Is there a place for people like that to get in as well?
They don't get the benefits of taxes if they're not using gains.
Sure, 'cause they're not rolling.
But absolutely. I mean, you can always invest for a good, solid return. But to mix money with tax money is probably not going to happen in the short term. There's people just trying to get this whole legislation understood first. So probably in the short term, no. In the long term, absolutely. But there are plenty of great investments out there that are not in the opportunity zone. So let's talk about what these zones are. There are well, if there's 8,700, so let's call it 9,000 times, there's 36,000 of these zones in the country that are, and so each governor in each state took 25% of those zones and designated them in their states as opportunity zones. Some are really very challenging areas, and others are actually pretty good areas. And so there's a lot of politics to how they got formed, but there's plenty of great areas that are moving in the right direction, so to speak. But you're going to run the risk of gentrification and pushing the very people out you're trying to help. So that's where we are different. We're really focusing on making sure that we only house people in that lost middle. We 80 to 120% of area median income, which is the example I gave you earlier. So we're trying to do the right thing, profit with a purpose. But let's face it, if you're building new product, certain rent you have to get, or you can't, lumber, everything costs. And so that's the challenge. It's trying to make things affordable. But there's still plenty of dilapidated old product that needs to be renovated, and we need to incentivize that too. And unfortunately, this law doesn't do that.
So this law really applies to the construction of new housing, not fixing distressed homes, for example.
Right.
Is there a place for doing that? Because a lot of these places, if you're fixing and helping the distressed homes, it seems like that might even be a better and more affordable way for people to get into housing that they could actually afford to pay.
Well, here's the rub. You've got to physically put in 100% of your basis. So let's say you buy a dilapidated house in New Orleans. Okay, I own a few of those. And we made them really nice and we rent them out. Let's say you bought it for $100,000. That means, let's say you could justify the land's worth $20,000, $30,000. Okay. So now you got $70,000. You got to spend $70,000 on that house. Not every house can justify spending the $70,000 given the rent you're going to get. So it's a challenge is the short answer. But yes, there's never a good time to do a bad deal or a bad time to do a good deal. I mean, you can always make some deals work, but overall, this legislation is not ideal for that. It's ideal for new construction because they were afraid people would buy vacant dirt and do nothing with it and try to get their gains and just land bank. So they made this 100% rule.
Makes sense. So 100% of it's got to go into the building of new property. So how do you find these opportunity zones to be able to invest into? How do you know these?
Well, we're lucky. We are.
I lost you there, but I got you back. You're back.
Okay, good. I said my internet is unstable. I feel pretty stable, but
it's not you. It's the internet.
Yeah, exactly. What was the question?
What I was saying is, how do you find these opportunities?
Oh, we are lucky. We are in the tax credit syndication business at Alliant. Low-income housing tax credit developments. And so we have about 100 developers out there who are working on building low-income housing tax credit buildings, the same product, but they have to get credits from the government, soft money, bond issuance, and this, we can go to them and say, hey guys, here's another arrow in your quiver. Just come to us and we'll fund your development. You don't have to deal with all the overhead and the red tape. So we get a lot of pipelines, so we'll have a lot of deals coming through. And we do our own development. There's always great opportunities out there. You meet, you've been in the business 30 years, people know you, and they say, hey, what do you think of this? What do you think of that? It's all about being in the know and in the flow, as they say.
So Eddie, what are you guys doing then exactly? And, our listeners and watchers that are paying attention to this, what step do they take to be able to get involved in this? Let's say they say, that makes a lot of sense. I don't like taxes. I have the money to do this. What does this look like from them, and how's this process, and what part are you playing in the process? How's that look?
Well, we're a fund manager, and we have a company like Common Good is a registered investment advisor, and they go out to different people like the LPLs of the world, and they can make an investment of $100,000 as long as it's a gain and they're an accredited investor. We all know what accredited and non-accrediteds are.
Mm-hmm. Okay. Well, you can go ahead. I mean, let's go ahead and throw that out there. There might be some people watching that don't.
Okay. So an accredited investor in general, is wealthy enough to make their own business decisions and investments. They make more than 200 grand a year, and they have a net worth of more than $1 million a year, give or take. So anybody who has to think about living on their income from an investment probably shouldn't be making these investments. That's the difference between an accredited and a non-accredited investor. So we can't take we can't take non-accredited investors, but we can take accredited investors. So we have a feeder fund. We have all the major institutions and banks that also invest their gains, and big family offices to put their money in, and they'll invest for the long haul into these funds that we have. And our fund will fund the developer who puts up 5 or 10% of their own money, and they build the property and we oversee them. So it's a way to diversify into different properties, your investment dollars, through people like us. And there's plenty of other people that are also fund managers, but you got to make sure that they're watching over your tax base, because you could easily have a tax recapture and that would be the end of the world. Well, not the end of the world, but wouldn't be too good. And
Sure.
So you got to be careful who you invest with and make sure that they're good stewards of capital, they're doing the right thing, and they're watching over to make sure there's nothing gone awry. Because when the IRS is in auditing, like they do all the time for our daily business, is just, low-income housing tax credits. That's just the nature of the IRS is there. So wouldn't phase us. But, some of these fund managers who've announced $3 billion funds, which is ridiculous. I don't know how the hell they can deploy that. How are they going to watch over it? So that's what you got to be careful.
So you got to be careful of the people that are almost accumulating too much money, where it's hard to look over it all and make sure all these projects are getting built as they should.
And here's another rub. See, this is why it's complicated. You have 6 months from when you took your gain, you sold your Apple stock, you got 6 months to invest that with a company like us or someone else. And then we have 31 months to make sure that money is spent in the ground. So that's why some of these issues are, if you take too much, how are you going to deploy all that money? And then someone's going to have a recapture. Or it's just too much to handle for people to be able to invest and watch over. And now you complicate it with this NIMBY problem, not in my backyard. And if something's not shovel ready, as we say, whereas you can actually put a shovel in the ground as soon as possible, and instead you have entitlement risk, and you have to go play the game with the local schmucko who doesn't like the traffic or doesn't like this or that, and you got to go to the city council and you got to go to this, and pretty soon 31 months are gone by, and it's a problem. So you really have to be careful that the people that you're investing with have the wherewithal and the properties that are shovel ready to go.
Sure, that makes sense. I mean, because you have 31 months to get this done, and you're not building a house. You're building like complexes, right? You're building apartment complexes. So I can imagine, I don't know what it's like. In Florida, they build these things pretty quick. But I imagine it would take at least a year and a half to even build something like that, I would think.
20 months with no problems.
20 months.
Yeah.
So about a year and a half. Yeah. So about a year and a half to do it. And again, you've only got 31 months, which is about 2.5. So if there's many hiccups, you're dealing with people that don't really know what's going on or don't have the properties lined up, then you invest the money. Years of time goes by without that money, and then you still get hit. There was no real benefit because you're dealing with people that don't know what's going on.
Exactly.
So how do you know, what criteria do you go through to qualify somebody to know that they're the right ones to be able to invest the money with, where you know that you have the best
track record? We've done the business with them more complicated than this. We know that they're going to do a good job at the basics without all the government red tape. So we're in a good position because we know we have history, we have experience. And so, not everybody has that benefit.
That's interesting. So it's one of the first times I've heard a little bit about opportunity zones, but I think everybody listening and watching doesn't know a lot about these opportunity zones. What else should we know about opportunity zones?
Well, I think that we've covered a lot.
I always like to see if there's any questions I didn't answer. So if you think of something,
I'll let you know. But
let me know.
Well, there's a lot of different issues. Like, imagine if you're a business Here's a great example. We were in DC and this guy says, look, I'm a venture capitalist. I invest in 10 companies. One's a home run, 2 are all right, and then 7 are losers. You're telling me that I got to go in there and invest and hold on in this distressed area for 10 years? I'm out. And that's when the IRS says, okay, you're right. We'll allow you to reinvest as long as you reinvest in another opportunity zone. So they don't miss the window to take their big gain as a venture capitalist. So the same thing can happen for real estate. We build an apartment building, we stabilize it, we sell it to someone who wants the cash flow. Now we can redeploy the money. That's it.
So are you guys, what are do you have a range of what type of rent is in these apartment complexes that you're building?
Well, yeah, I mean, we're looking at a Utah, Salt Lake City, 1,000 units, and the rents are in the 1,500 range. So still pretty decently workforce. I wouldn't say low income because they're not in the $700-800 range as we talked about, but 1,400-1,500 for brand new products, not so bad.
So you're building the properties, which is one of the 3 things you talked about. It also comes down to making it more affordable in these partnerships as well. So are you guys doing things with the other 2 pillars there, the partnerships that are needed to kind of offset the expenses for some of the tenants getting in there? Are you focusing on building more affordable units, or what other things can be done to fix this affordability problem that we're still up against?
A certain percentage. Well, first of all, build more, and it all trickles down. Now I'm sounding like the right winger. I am a left winger too, but build as much as you can, and that creates more supply, regardless. Secondly, yes, we will be building. Most cities now require what's called inclusionary zoning, so 10 to 20% will be affordable. So we have to pro forma that out. So that's all part of our method. And then we're trying to serve the missing middle. And that's what we said. We're not going to rent to people who make more than 120% of AMI. So that's one thing. But we also, another part of our business is buying and rehabbing existing properties. We're closing on a building that's 200 units right outside. It's like literally a golf shot. It's a 40-year-old building. It's what we call naturally occurring affordable housing. 40-year-old building across the street from Washington, D.C., literally a golf shot. And that has been owned by the same guy for 15 years. And, they've maintained it, but it's really kind of, they haven't really spruced it up. There's no amenities. So we go in and give people that clean, safe, affordable place to live, treat them with respect and dignity. They stay, they pay, they refer their friends. So that's the exciting part of taking what we call NOAA, naturally occurring affordable housing. There's so much blight out there we can make light. That's also part of the formula. But it's not an opportunity zone investment. It's just different.
Right. So in that one, you're not getting the tax benefit. But
No.
in that case, what are you doing to make sure that you find the right properties where it offers the affordable housing? But like you said, you could still buy the property and rehab and do what needs to be done to still not break the bank and be able to make it still affordable for people buying or renting.
Well, it's all tagged to area median income. We look like in the DC area that, it's like $70,000, $80,000. So if we can rent to people that are making 70% of AMI, that's very affordable. The definition of affordable housing, in my definition, is anybody making less than 80% of AMI. Anybody making more is what I call workforce. But so we're buying in higher income areas and trying to buy older product that's kind of been neglected and really clean it up. And so that's our part. So we're doing NOAA and we're building new.
Are there tools that other people that are wanting to get into this and find the right area and help solve this problem of affordable housing? Are there tools and resources that your average investor can use to get in and help solve this problem?
Well, I think we're ahead of our time. Honestly, I put together what was called impacthousing.com, which is a workforce and affordable housing REIT, and I was unsuccessful in raising enough money. So we all need to be more conscious about our investments and to our investment advisors. And a guy like me coming to an investment advisor trying to do impact is falling on deaf ears, at least for the middlemen. And most people, let's face it, still use a middleman. So every individual needs to demand the type of investment they want to make, no matter what level you are at. And it's going to take time. And this millennial generation does want profit with a purpose. But the older generation, the old guard, is a little less hungry for that. So I think we need a fundamental shift in investor appetite. I think a lot of the patriarchs of these wealthy families need to either get senile or die. I'm not trying to be funny, but it's a problem because it's not a priority. And as a consumer, we all need to make a priority of how we invest. And we got to speak with our money. So I wish I had a better answer.
Well, what about community? I mean, a lot of people are, into their community. So is there a way what should people look for when trying to find the right community to actually invest in? I mean, maybe they want to be involved with affordable housing, but I don't want to do it in New Orleans because I can't relate to that, right? I'm in Tampa and I know there are areas here that could use my help. We find a lot of investors that are like that when they want to give back and they want to do what they can do, but they want to do it in areas that have an emotional tie to them. So how can you find the right investment there where you're kind of invested into it emotionally, but you're doing it you find the right community to do it in?
We all need to do a better job of making it available. And right now, there are not enough vehicles that are out there that are available. But as far as if you want to help, just start networking in your community and find out where the local shelters are, where the local opportunities for boys and girls clubs to help housing children or battered children. There's local domestic violence housing needs. And there's a lot of vouchers out there if someone wants to take the time to find houses to house people that are old. The population's aging, all the baby boomers. There's an opportunity to do that. And there's government involvement there. But I mean, it takes a lot of research, a lot of work. It's bureaucracy. Everything's work. It's not like you can do it on the side. You got to really be committed to making a difference and fighting the battles. There's a nonprofit here, LA Kitchen, which is such a shame. But the guy for 5 years took and redistributed produce. We have one of the biggest produce marts in the country, in LA. And he redistributed the older produce and worked out a system to feed thousands. And he got so caught up in the red tape that he gave up. It's just really hard. And I hate to sound like that, like a defeatist. I'm not a defeatist. I'm an opportunist. I'm an opportunity guy. I'm optimistic. But the reality is, it's a lot of work to help the world, and no good deed goes unpunished. And unfortunately, there's so much against you out there that people just say, screw it.
Eddie, what other problems do you think that
Sorry,
people... No, that's okay. I mean, that's all right. It's the reality, and that goes along the same line of thinking that I'm having is, what other problems don't we know about that people that are trying to invest in affordable housing you think are going to face, they should be aware of so they can prepare to overcome those obstacles and succeed in doing this and helping others?
For me, two things need to happen. One, you need to be able to come up with that differential. If the most people can afford to pay is $1,000 and the rents are going to have to be $1,300, you got to find a way to bridge that gap for people, whether it's the government, whether it's city, state, federal, foundations, whatever. And number two is you have to find the right equity, meaning the right investors who want to invest and will take a return that is longer term than shorter term, because a lot of people want blood for real estate. And real estate's a slow wealth creator, and it's not meant to be traded. So this is part of the fundamental problem. Really need to focus on the long-term investor and the way to bridge the gap between the rents today, which is inevitable, and what people can't afford.
As we get ready to wrap up, anybody else that's interested in getting started with you guys, whether it be the opportunity zones or just doing something and committing part of their own funds to get involved with affordable housing, any other parting piece of advice that maybe we haven't already covered?
Stay the course and please don't give up. It's a challenge. I wish it was easy, but if it was easy, everybody would be doing it. If we all just do a little bit and clean up what's in front of us, maybe we can make this world a little bit better place. But I'm frustrated, but I still keep moving, and we can't stop living. But it's a challenge. It really is a challenge.
Well, look, it looks like we're moving in the right direction. I mean, this opportunity zone sounds like this could be huge and a big change that could create a fundamental shift that could solve this problem. And I'm not familiar with it, the problem. You obviously are. But it sounds to me like this could be probably one of the biggest potential moves forward in recent times to help fix the problem. I mean, is that the way your perspective or?
Yes, I just wish that we could lower that 100% of CapEx down to 20 or 30%, and we could fix what's existing. I wish there was incentives for that, but with this new Congress, nothing's going to change. That's the unfortunate. So we got what we got. But yes, I think it's going to be great.
Where can everybody go to learn more information about this, to figure out if they have money they want to invest with you guys to take a next step forward?
Yeah, we're alliancestrategic.com or strategicrh.com. My email address is ELORIN@strategic.rh for realtyholdings.com.
Okay, so that's alliancestrategic.com.
ALLIANT, no C. Alliant Strategic, one word.
Okay, so alliancestrategic.com.
You got it.
Perfect. And I really appreciate you being on today. I think this has been eye-opening. I, for one, learned a lot that I did not know, and it brought a lot of attention to, I think, this cause and this purpose. And I think, it makes a lot of sense. People should get involved in this and do anything they can because, like you said, this is a systemic problem that affects way more, many, many millions more than I thought it really did. So, again, thank you so much for your time and coming on with us and sharing with us today.
Pleasure. I hope I could help. Just trying to be part of the solution rather than the problem.
And if you're interested in being part of the solution as well, make sure that you visit alliantstrategic.com. That's ALLIANT strategic.com. I'm going to ahead and put a link to alliantstrategic.com on the website and some of the other links that we talked about as well. Remember, this is great information for you to know about the problem, but if you're not doing anything to solve it, then you're not really contributing to the solution. So if you want to be part of the solution, even learn more, even spread the word about this, what's going on, invest yourself, work with other investors to help solve this affordable housing crisis, then make sure you go to alliantstrategic.com. That's alliantstrategic.com.
Very nice. Thanks.
Thank you. I really appreciate you coming on with us, Eddie. This really meant a lot.
All the best.
And thanks everybody for tuning in. Make sure you visit alliantstrategic.com.